Good morning, traders. I am just getting started at the charts this morning. And yesterday, John and I were gone for most of the day. We had to leave early during the trading session yesterday, and we were gone till late yesterday evening. And so I'm literally just now sitting back down to the charts, and I want to show you the difference between two setups. One, which occurred yesterday while we were here, but played out after we left. And the difference is what is a good entry and what may be a more challenging or not as high probability entry would actually look like. How do you know when to enter? Just because price touches a zone does not mean we enter the zone right at that moment. And this is going to be a great example of why you would wait until price gives you a clear indication that it is moving in your direction. What we see here on the Aussie CAD, and this happened yesterday morning when I actually sat down at the charts. I was looking at the Aussie CAD pair, and I sat down. It was probably a little bit after 5, so probably about where you're seeing my mouse right now, right in here somewhere. And what I see obviously is a break to the downside on a short-term time frame. Now we're on the 5-minute, and what we have is where price came into our 1-hour trading time frame demand zone. So this zone right here, this zone marked in green, is a 1-hour time frame zone, okay? And this is my exact chart markup from yesterday. And as soon as I sat down, I see that, hey, there's an imbalance here, and we've already had price push up, and from the break of structure to the downside into the buy zone. Now we're looking for price to show us, is it going to react at this buy zone or not? And so all we're doing is on the smaller time frame, looking to identify and draw refined zones and to look for how price is reacting at those refined zones. And so as soon as I sat down yesterday, obviously we can see that price pushed up and pulled back here. And so I'm looking at this pullback area and going, okay, where's my refined zone? And let me flip this over to a refined zone here. And so I think my zone was probably drawn out something like this yesterday morning to start out with. And so I'm watching price bounce up and down through here. And what I'm looking for when I go in for an entry is I want to see price telling me that it didn't just touch into my 1-hour zone, but that it's actually moving out of or moving in my bias. In this case, it's going to be to the upside. I want to see evidence that it is moving out of my zone. A lot of times you will see where price will just touch and it will immediately rocket out of your zone, in this case, to the upside. But a lot of times you kind of see right here is that price just really bounces around in a range. All the time I'm watching this, of course I don't want to miss a move, and of course I want to get a great entry, but price never did really show me that it was looking to move. There you got a lot of wicks, a lot of just stationary, very stagnant movement, and what I'm watching play out yesterday was you had this liquidity pool kind of forming here and here. You kind of have a liquidity pool forming here as price just, even as it pushes up, I'm kind of going, is price pushing higher, or is it just part of this retracement right here to continue to push lower? And I just want more evidence that it is leaving to go out of the zone. So just because it closes above the zone does not mean I automatically enter. And so all of this, seeing this liquidity being formed, I was very, very cautious in my entry. I did have this refined zone that came over until price traded back through. But what I ended up seeing was that this was just kind of a consolidation range. All of the candles are really, really tight. It's not the type of price action I like to see for entries. And what happened with exactly the way I like to see manipulation is that we saw price spike up, pull back, and that could fake you out to think, oh, price is absolutely pushing to the upside, but price pushed a little higher, take out everybody's stop losses that were here and above this level here, took out everybody's stop losses, popped just above, which when I see that, I'm looking at liquidity sweeps and I'm going, well, you got a sweep to the upside and you got a possible sweep to the downside. And at this point, I still don't know. I mean, for all I know, price could come up, sweep, pull back in, and then push to the upside. That isn't what happened. We saw this sweep, and just like my very favorite setup, if I was looking at sell zones and retracements to the downside, this would have been an indication of a possible really strong sell. In the setups yesterday, though, it was a caution because I was on a buy zone, so I was actually looking for a possibility of buys. And we see that price pulls right back into the zone and then starts forming supply zones here, which are showing me of price pushing to the downside. And we see this setup again where price is again forming liquidity pools here. And we see price one more time push up, pop right above that liquidity pool, take out anybody's stop losses that had been sitting here before popping lower. And then we had pools being formed here. Now I originally, and I don't think I didn't have it marked on here, but I originally was looking, I believe it was this 93,200 price point that I had my eye on. And so even as I saw price bouncing here, I thought, oh, you know, we have this spike here, huge rejection candle, really kind of came right off of this refined zone. And I think for a little while I actually had this refined zone marked here as well, and price came in and rejected here. And so even when this happened, I think, oh, we might be about to see the move to the upside. But I still had this liquidity pool forming here, and I just really was not seeing real fluid price movement that convinced me that price is moving to the upside. And what did we find? We found this setup where, just like this one, price swept all of the liquidity pool to the downside, bringing this refined zone invalid. And we see the same thing where price spiked up, took out these stop losses, and then came and swept liquidity to the downside, and now this refined zone is invalid. And again, my price point was at this 93,200. That was now really traded through, and we see then price push to the downside. Now, I was not at the charts. John and I were gone, but I wanted to show you the difference between this price movement, which for me would have been a forced move. If I was just desperately trying to force a trade, you would have tried to take entries between those. But the way this price was printing, I wasn't interested, because what I want to see is price printing like what you see here, where price actually moves out of the zone. For me, it looks totally different. You actually have movement and fluidity starting where price is moving. And again, I was not at the charts as this was happening, and everybody is a genius in hindsight for sure. But this is what I look for in my day-to-day entry when I see price pop into one of my trading time frame zones that were drawn on for me right now. With the time frames I trade, the 1 hour zone, when price comes in, I'm just watching to see what price is doing. Now, again, it's easy for me to say, sitting here the next morning getting ready for my trading day, to say, oh, I would have done this, but I can 100% tell you where I would have started marking my refined zones, because you can see a huge difference between this price action and this price action, where now price is starting to show me that it might be thinking about moving out of this zone. It's not so consolidated and stuck. And so I would start drawing my refined zones. I would start drawing them and watching how price is moving up and seeing where price pushes up, pulls back, pushes up, pulls back. Where are the structure breaks? price is now breaking to the upside, and you're seeing movement and momentum. And I can tell you, any of these zones that I am drawing right here, I would have had zero problem taking a trade from any of these zones just because of the clarity of price movement. Even on this one where price popped down a pip or two right below this low here, you had liquidity forming at the top. This would have been a fabulous setup for me. And for me, again, had I been sitting at the chart, that would have been something that I would have looked at as a high probability setup. If I missed that one, or if I needed more confirmation, I would have had zero problem with looking at this zone right here. It's also at a break of structure, which gives it a little bit of a high priority for me. Pullback, price came right back to that zone, hit it. And even if I needed confirmation coming out of that zone, I would have looked at that being my new basing candle here. And let me draw that out for you. Even, again, if I just want more confirmation of that price is going in your direction, just because it hits in a zone does not mean it's 100% going to react at that zone. And so I want to see evidence that price is moving in my direction. It's one of the powerful pieces of this strategy. And so even as price came into this zone, formed it through pushing up and pulling back and then moving on out, when it came back, if that touch wasn't even enough for a confirmed entry, if I made this doji my new basing candle as price pushed up, broke this little bit of internal structure to the upside, came back and touched that refined zone again, I would have had no problem taking an entry here. Now, price isn't moving a whole long ways, and it's not the best trade setup, because if you actually look at this on the 5-minute, you're actually pushing up here to this refined sell zone here, or this sell zone that you can kind of see on the 5-minute. And so just watching price movement, but you could have picked up probably 15 or 20 pips from that move. The point being is that you have where price pops into your zones, and just because it touches a zone does not 100% of the time mean there is a entry. When price is already showing you that it's breaking structure and moving to the upside when it comes back and touches, that's one thing. But when price is not showing you that it's gotten any indication that it's going to the upside, that's another thing. And so when price is moving like this and it's breaking consistently to the downside, I'm a little bit more cautious than I am when price starts breaking to the upside even within my zone and is constantly breaking to the upside, even if it brings a pullback, which we want, into one of our zones. So you can see the difference between when there's confirmation and more comfort in taking entries, which I admit I am a lot of times a more conservative entry. It's one of the reasons I have a high win rate and one of the reasons why I am able to protect my capital, but I 100% miss entries at times or leave a couple of pips on the table. But it's worth it to me to have a strategy that's more solid. It just fits my trading personality a little bit better. Again, we see here in this setup that even though we were looking at buys, that price did go up just a little bit, didn't quite make it to our imbalance line here, and is pushing back down to the downside. And I didn't point it out a while ago, but I also had an area of imbalance that was here, and I had marked out this 93-100. And so even as I was sitting down at the chart, I'm also going, just because price looks like it's possibly pushing up, it absolutely could have been pushing up to this imbalance here, but there was the same probability that was coming on down, and it came within a couple of pips to my imbalance line yesterday. And John and I were already gone. This was 1 o'clock, and so we weren't sitting at the chart, but I would have absolutely loved to have caught some of these moves. It would have been great to the upside. So a very exciting setup. Now the flip side was the Aussie dollar, where I want to show you this example where we have a 1 hour, this zone right here that you see, this red zone is a supply zone. This one was drawn on our 1 hour time frame, and we have price came up into our zone. Again, I was not at the chart, but I just want you to see the difference between price movement that shows me that price has the intention of moving in my bias, or like on the Aussie CAD that we just saw where I'm questionable, where I'm not just diving in. We see where price came up and originally touched our zone. As soon as it's here, I'm dropping down to the 5 minute, and we are on the 5 minute, and we just see price bouncing. And in none of that am I seeing any indication that price is yet moving to the downside. So as price comes up and moves into my zone, I'm not looking to place an entry right here. Again, I see no evidence that price is showing me that it's moving to the downside. And so I'm watching price, and price moves up into our zone. And I don't remember what price point or what I was looking at here, probably the 7100 or the 7200. Again, I'm not looking to the left. It was more for an entry example because these were actually refined zones that I had marked. And so I'm watching price come up, and until price shows me that it's trending very well. I mean, look at this beautiful price movement. It's trending so well. And then as price leaves the zone and comes back in, I'm starting to pay attention. And so I'm starting to mark these retracement zones and look at where price is retesting those zones. As we know, we trade previously established retracement zones. So we want a pullback zone established, and then we want to see that zone retested. And any of these where price pushes down, comes back and retests, beautiful entries, again, entries up here, but I just want to see price starting to move. And there is a big difference between looking at this price movement to the downside and looking at this price movement to the upside that really didn't have any momentum behind it. And you're not going to catch it every time, but I just wanted to kind of show you this example of that there is a big difference of how price looks when it kind of consolidates in ranges that don't force a trade. Don't be so invested that you're looking for this move to the upside or this buy zone. Just because it's in a buy zone doesn't mean that price is going to move to the upside, but a lot of times you will have that price has a small reaction at that zone, but it doesn't mean just because it touched it right here that it's time for an entry. It doesn't mean that. Wait for that confirmation. Let the strategy work for you and watch for price action to begin forming your retracement zones, and then let it retest a retracement zone in your direction, and then take your boss ass entry and put those pips in your pocket.